Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're diving into the recent rise in fixed mortgage rates and what Canadian borrowers should be aware of. It's a significant topic, especially considering the current market volatility.
Absolutely, Steve. For those who haven't locked in their rates yet, the recent increase might come as a disappointment. It's a complex situation driven by a mix of international and domestic factors.
One of the key factors is the confusion surrounding tariffs, which has pushed bond yields higher. As bond yields are a primary determinant of fixed mortgage rates, this has led to the recent uptick in rates.
That's right. The trade tensions, particularly involving the United States and China, have created a ripple effect across markets. It's not just about tariffs, but also about the political uncertainties, like President Trump's threats towards the Federal Reserve's independence, which have shaken investor confidence.
Indeed, Janine. The political landscape, especially with threats to fire the Federal Reserve Chair, has put the credibility of the Fed and the stability of U.S. investments at risk. This uncertainty has driven investors to demand higher premiums, affecting bond yields and consequently mortgage rates.
And when U.S. yields go up, Canadian yields tend to follow. We've seen the Government of Canada 5-year bond yield increase from 2.46% to around 2.8%, which has prompted Canadian lenders to pull back on previously offered discounts.
Exactly. Since Monday, we've noticed a 10 to 15 basis point increase in some fixed mortgage products. While these might seem like small adjustments, they can significantly impact a borrower's decision-making process, especially since rates are still higher than they were at the start of the pandemic.
For borrowers, especially those with insured mortgages, the lowest 5-year fixed rate is around 3.79%. However, for many, particularly in pricier real estate markets, the most competitive rates are back above 4%, which can be daunting.
Yes, the psychological impact of crossing that 4% threshold can't be underestimated. It's crucial for borrowers to consider securing a rate hold, which can protect them from further increases while allowing them to benefit if rates drop.
A rate hold is indeed a wise option, offering peace of mind for up to 120 days. It's particularly beneficial for those renewing their mortgages or entering the market. As always, it's about making informed choices to secure the best possible terms.
Let's shift our focus to an interesting trend emerging in the Ontario real estate market. According to a recent report from Taranet, the typical first-time homebuyer in Ontario is now almost 5 years older than they were a decade ago. In 2014, the median age was 36, but it has increased to 40 by 2024.
That's quite a significant shift, Steve. It really highlights the affordability challenges that many are facing. The report attributes this delay in entering the market to the skyrocketing home prices we've seen in the province, especially during the pandemic.
Absolutely, Janine. Despite some market corrections over the past 2 years, the benchmark price for a home in Ontario is nearly double what it was a decade ago. In areas like Hamilton, London, and Tillsonburg, prices have increased even more drastically.
And while interest rates have been falling, easing the burden slightly over the last 4 quarters, the cost of homeownership is still higher than it's been since 1990. In Toronto, for example, the median household needs to allocate about 71% of their pre-tax income just to cover mortgage payments, property taxes, and utilities.
That's a staggering figure, Janine. It really puts into perspective the financial strain that potential homebuyers are under. The increase in the median age of first-time buyers is a testament to these affordability issues.
It's definitely a challenging time for first-time buyers, but it also emphasizes the importance of careful planning and saving. Delaying home ownership might actually provide some individuals with the opportunity to save more and make more informed decisions when they do enter the market.
That's a great point, Janine. While it might be frustrating for those eager to own a home, this delay can also be seen as a chance to strengthen their financial position. It's crucial to stay informed and prepared for when the right opportunity arises.
And as always, working with knowledgeable professionals can make a huge difference. Whether it's understanding the current market trends or navigating mortgage options, having expert guidance can help potential buyers make the best choices for their situations.
Now let's delve into the recent retail sales data from February, which has sparked discussions about the potential for another rate cut by the Bank of Canada. Retail sales saw a decline of 0.4%, bringing the total to $69.3 billion, with significant drops in auto sales and housing-related sectors.
It's interesting, Steve, because while these numbers might seem like just statistics, they actually reflect the everyday experiences of Canadians. The decrease in sales, particularly in motor vehicles and parts, shows that consumers are hesitant to make big purchases, possibly due to economic uncertainty.
You're right, Janine. The drop in sales is not just limited to vehicles. We saw a decline across several categories, although core retail sales, excluding gasoline and auto-related purchases, did see a slight increase of 0.5% thanks to grocery and liquor store sales. But overall, the numbers indicate a sluggish start to the year for consumer spending.
And it's not just the national picture that's concerning. 7 provinces reported monthly declines, with Quebec and Nova Scotia experiencing the most significant decreases. On the flip side, Manitoba had a positive outcome with a 1.8% gain, largely due to increased vehicle sales. This highlights the varied economic conditions across the country.
Yes, the regional disparities are quite telling. Looking ahead, there is some expectation of a temporary rebound in March, as suggested by Statistics Canada's early estimates. They anticipate a 0.7% increase, possibly driven by consumers rushing to beat new tariffs. However, economists from BMO and CIBC caution that this uptick might not be sustainable.
Exactly, Steve. Both Shelley Kaushik from BMO and Catherine Judge from CIBC have noted that the temporary boost might not alleviate the underlying issues. The ongoing trade tensions and potential job losses are likely to keep consumer confidence low, which could influence the Bank of Canada's decision on interest rates.
With the Bank of Canada's policy rate currently at 2.75%, economists are predicting a 66% chance of a 25 basis point cut at the June meeting. This would bring the rate down to 2.50%, providing some relief to borrowers, but also reflecting concerns about economic growth.
It's a delicate balance, Steve. While a rate cut could offer relief to those with existing debts, it's also a signal that the economy needs more support. For potential homebuyers, this could mean lower borrowing costs, but it's important to remain cautious and consider the broader economic context.
Absolutely, Janine. As always, navigating these economic changes requires careful consideration and planning. Staying informed and working with knowledgeable professionals can help individuals make the best decisions for their financial futures. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.